Morning, everyone. It's Saturday. It's Chris from Solstice ATR. You can find us on Twitter, Instagram, Discord. Remember, we use this adaptive algorithm for side market, up market, as well as down market. Just remember, we're not a broker dealer. Past performance does not give you indication of future results. And remember, this is for educational use. You can reach us once again, at the website or get in contact with us. Let's go to the first slide, and I want to talk about the overall market and what can happen during trading hours, whether it's on the long term or the short term or midterm. Here I put something very simple. Can the stock market charts signaling some pullback? Of course they are. On the weekly chart, the candle pulled back. Sometimes that volatility opens up. It's normal part of trading, so we got a high, then we get a lower high, then we get a higher high, and we get continuation. Remember, in these videos, I usually put some information which are very critical for every week's outlook, as well as 3-month outlook, 1-year outlook, 2-year outlook. I talked about a little bit about the baby boomers. They need to spend more money because they are actually retiring. They have to take distribution from their retirement accounts. It's called RMDs when they turn 70 and a half. So there's $74.8 trillion sitting on the sideline need to be spent. We got millenniums are going to start working. We got Generation Z as well, artificial intelligence coming in. From 1 year to 10 year, we can get, short-term downtrend as well as long-term outlook that are higher. Some of the sectors to consider is the New York Composite, American dollar in relationship to the global markets and different currencies, the VIX, which is the fear and greed factor, as well as the bond market, where the yield's going to be, where the par value of the bonds are in relationship to where we are in the overall market. Remember, we trade both sides, bull and bear side. Don't be biased, ended up stuck on one side holding the bag. Try not to do that. Let's go to the next slide. This was last week's slide that I put in. You can take a snapshot, look at it. If you have questions, let us know. Remember, you can hit the subscribe. If you like this video, let us know. Let's go to the first slide that I have up here. And what I wanted to do is the New York Composite. This is the weekly, showing us 5-year history after the COVID-19 gap, March 23rd, the rally consolidation in 2020. Then November to December rally, we had the January 21 low. We rallied up. Then we looked above in 2022. We failed. We tried to go back up in February, March, failed, came back in August, June, July. August tried to rally, failed, came back in 10-10, tried to rally in December. We fell back down. Ever since we had remember the Silicon Valley Bank, the rally up, fall back in, and rally back up. This week is an engulfing candle on the weekly on the New York Composite. So if I go to the daily chart, remember the RSI usually trends up or trends down. Usually most people use 70-30. We use usually 15 to 20 and 80 to 85. And I put two simple lines between the midpoint, which is the 61.8. You can see it here. And I put a 38.2 here, but I didn't put a 78% or 20% down here, 23 and 7. That way I can have an idea where the market is heading, and I can draw trend line up or trend line down for the direction of the moves on the weekly charts. Directional momentum indicator, there's a positive one and a negative one. The direction is called DMI. The momentum index, which is positive, is green. The momentum that's the directional momentum negative is in red. Usually you get a uptrend range from the 15 all the way to 40 going higher, or vice versa. And the average true range, which is the ADX, it's like similar to an average true range. An advanced decline line, which is the ADX, collects the DMI plus and the plus and the negative to give you an average on both. Whenever the DMI gets picked up by the ADX from 15 and going up, if the momentum is down, the DMI negative is on top, ADX is at the low, and vice versa. When the DMI positive is up, the ADX picks up the DMI positive and takes it in the direction of the move to the upside. This is the weekly. Let's go to the daily chart and look at it a little bit more in detail. If you have questions, remember the RSI was coming down. It's reversed at the 38.2, rallied to 61, looked above, failed, came back to 50, got a bounce, rallied up to 61, failed again. And if you draw a down uptrend here, this week you can see on the daily chart, we lost the momentum at 70, falling back into the 50. Pay attention to that 50. If this directional in the RSI, the 50 is lost, what we're going to look is for the 38 to then reverse back up. And if it continues lower, you look for the bottom side of the 20, 25, 30, and 15 to reverse back up. And the directional momentum indicator, the DMI negative takes it down, the DMI takes it back up. So look for the crossing and where the ADX, the average of them, picks up the high or the low. Let's go now take a look at the SPY. I want to use the SPY, which is the electronically traded fund for the S&P 500 or the E-minis. You can see that the RSI on the daily, if I zoom in here, we can see that the RSI is in a downtrend. RSI lost 50. ADX is coming down. The DMI positive lost its momentum from 45, 40 coming back to the 15. Pay attention if there is divergence for a reversal back up, or when we find support at the F3, which is the 38.2 or the 50 SMA. The 5 and the 18 SMA crossed. This is what we call death cross, but most people look at the 20 and the 50 on the daily, weekly, and hourly chart. Pay attention to those. On the daily, we have lost it. We have a professional gap up here that is there, and we have a virgin control POC up here. As well, we looked at the POC and failed higher. I'm going through too much information. Please let us know that the SPY is now in a downtrend. We're looking for support somewhere in this range. This gap was filled. Usually we look for gaps. There's one little one up here. Can we fall all the way to 61.8? Yes, this is the 50 SMA. This is the 89 EMA for testing. This is the 116. We do not use 100 SMA. We use a 200 SMA and a 250. So pay attention to the direction of the RSI, the DMI, and when they reverse. Let's go down to the 4-hour chart, and I'll break down 2 other charts. So we're going to go time frame, intraday, daily. We're going to go 15 days on 4 hours. We're going to go down to 4-hour chart. On the 4-hour chart, we know that the range Monday was here. We had looked prior here. If you consider this as a shoulder, this is the head of it. This is some kind of a funky high shoulder, and we fell through and we couldn't clear this area next week. We are in a downtrend. So what I can do, get a measuring tool. You can see the fibs, resistance, support, 38, 50, 61. But what I'm going to do is get a measuring tool. I have anchored this, and we're going to draw from the weekly high, which is Monday, Tuesday high. This is the high. You click on it. Oops, we didn't pick it up. Where are you? Pick it up. We go from high to low since the trend is down. We have these Fibonacci's or measured moves. They are in units in 20 and 25. The extensions to the downside. What I wanted to show you, usually the 80 and the 100 are usually buyable support and resistance, and vice versa at the top. So we are looking for expansions on either side to pick up the momentum to the downside. And if we come back to the 38, that we clear in order to continue higher, or do we fall further down, or we get continuation on Friday. If we take the RSI from this high here all the way to this peak here, and this one, we can draw a downtrend channel on it. That downtrend channel, I can grab it from here to here. This is one trend channel, and I can do one from here to here. As long as I do not clear this downtrend channel on the 4-hour to the upside, the trend is still down, coming down to the 20. So this is how we look at change in trend on the upside or the downside. I'm going to remove this so we don't leave them on the charts, so we can keep it clean. And if the DMI negative loses its strength and reverses, and the DMI plus comes back up and crosses, the sentiment does change. So we have this downtrend here on this chart, which is a wedge. Pay attention to it on the 4-hour on SPY. Let's take a look at the IEF, which is the electronically traded fund on the bonds. We're going to go to the weekly again and come back to the 4-hour. You can see that the bonds started to spike up. Is there going to be a slowdown in interest rate? Possibility, because we got a reversal hammer on the weekly chart on the bonds. We can see that it had a rounded top three tops, 1, 2, 3. This is around the top. If it fails, that's like an M pattern, but if it finds support and breaks back above the 50 and the 18 SMA looking to the upside, that would be great for the bonds. So we go to the daily chart. We can see that on the daily chart. I usually use ovals. I haven't, been doing Fibonacci's on the IEF for a while. You can see that we had hammers. We looked below, got the support at 94.36, 94.40, and we rallied back up in the bond sector. So pay attention to the bond ZF, ZN, or ZQ. Let's go right now to the dollar. Oops, DXY. And we can see that the dollar is in a symmetrical. We had that downtrend. Now we rallied up. Pay attention to the dollar if it's going to lose its strength. We are still in a linear regression downtrend. We can see that the trend, we got to look above and failed on the dollar. Pay attention if the dollar finds support at the 18 SMA or falls right through back below the 150, where is support in this consolidation of the breakout, because it tested it here, came down, rallied up, came back, retested, broke up, retested this area. You can see those candles bounced up. Even if it comes back and finds support in this consolidation, that is very important in the dollar. Let's go to the VIX, the VIX. Oops. VIX, which is the ETF fund. We can see that the VIX starting to pick its momentum up. Remember last week in the video, I had suggested for people to pick up the VIX before the rally. I've been calling this VIX from this area here all last 2 weeks ago in our group. So I told everybody, pay attention to the VIX, because this is consolidation and baseline. Even if it goes back to $12, it's a very good area. So we had the spike up, retested on Thursday, fell back in, retest, close inside. Then on Friday, fell down and rallied off the 61.8. If this clears the 17 area, 18 area, and stays, momentum is bullish all the way to fill this consolidation where we fell from, and you would be looking between the 18.50 all the way to $20 in the VIX. So that's the VIX. Let's go to SPX. And this is the S&P 500. I have a lot of information on it. Once again, we're going to look at it in a little bit in more details here, and I want to draw the Fibonacci's for you so you understand how to look at it in relationship to support and resistance. That was the February high. This was the December high, January low, the March low after the Silicon Valley. You can see the momentum. This was consolidation baselining for a month or two. This area is very important, critical area. This has a lot of volume, and the annual Fibonacci is at 50. So if I look at the high coming back down, we got a professional gap here. We got a virgin POC up the top. And we have this consolidation here, the 44. If I zoom in here before the gap, let's just zoom in here by itself. When the momentum gets picked up, you can see the RSI picked itself above 50 and rallied, and we continue, we reset, retest this consolidation, rally higher. We got this gap, reset, followed. There's this gap here. We can see it in the candle on the SPX. This is a very important gap. And the second one is down here. Are usually gaps fillable? Yes. They do not have to fill, but we have to pay attention to the weakness in the market, because we got a professional gap up here. We got a virgin POC at 45. 78 area. We continuing lower. We tested the 18, couldn't break through it. We fell back down. We got an engulfing candle. I am paying attention to this consolidation here, that when we tested this gap, we had this one here. We came back to retest it. There's a 50 SMA and the 38.2 FIB. So this is the daily Fibonacci. If I take this day, this day, this day, this day, and this day, from Monday, I can grab that measuring tool like we did earlier. There's the measuring tool here. I can grab it from high to this low here, and I can draw it, and you can see where the highs and low and the extensions at 50, and the 80%. Usually the 80 and the 100, usually you get a reversal, does not have to, and vice versa at the 50 for institution. This is the weekly measured move from high to low. I am not expecting all the market just to collapse one shot. The volatility's here, and I hope this helps. Let's go now to the Bitcoin, and I'm going to use slash BTC, and I'm going to use the micro to do the Fibonacci. You can see on the daily chart and the weekly, the trend was up. Every time we retested the lows here, we bounced off it. We consolidated here, coming back in a downtrend wedge. If I get a channel on the daily chart on Bitcoin and I zoom in here, there's this downtrend from this candle all the way to this candle. This is a wedge. Even if it comes back and retests this area where we broke up, we had those three soldiers, this consolidation area, and I have an oval, very important area. Even if it comes here, this means there is support here for us to continue higher, because this was the consolidation. Look below, rally, consolidate, fall back in. Even if it falls back in a little bit, we are finding on the daily 50 SMA still holding us up. So on the 4-hour, if I go look at it, so what we're going to use is the micro BTC, micro BT. So I'm trying to show you the different ways to look at it. We're going to go to the 4-hour chart daily, intraday, and we'll go 15 days on a 4-hour chart or 2 hours. It doesn't matter which one we use. I want to find where the highs and lows are for the week are. You can see there's a lot of consolidation here. Rally, fall back down to the 28.8, rally back up, fall back down, find 28. We looked at 29,000 and we bounced off it. If there's going to be continuation on that 4-hour chart, look at BTC to continue clear the 38.50, which is like 38, 50, 61, or vice versa. It depends if you draw from low to high or high to low. So this is the Fibonacci, and you get the extensions to the top, extensions to the down. So what I'm going to do is grab a Fibonacci this time. I'm going to do the same drawing from bottom, which is the support, to this high here. And what I want to show is the extensions to the high, where the possibility we can go if the momentum is up. And if the momentum is down and we end up back in this area, that's where the support is. But if I think this is our support, and the 61 and 78% was the 80% rule here from last week, if I grab this area, remove the drawing, okay, I can get the measured move to show you where the 80% is. I grab from low, high to low. This is my 25%. If I put the 80, I'm going to show you how to look at it. This is an 80, 100. So if I grab a box, this box will give me the sentiment and the overall where it is. I can extend it on, activate it, grab it to the top and put it from the 0 to 100. Okay, let's let it go. Put it on auto. I didn't activate it correctly. Activate. So we're going to anchor it on that candle. So it kind of found support here. So I'm expecting the move to go back to the upside. So I edit the property, duplicate the drawing, grab it to the top. That is your extensions for the week, high and low, and where you're 50%. So we're going to trade what we see. Pay attention to the RSI on the 4-hour. It's in a downtrend. But remember, if the 38.2 and the ADX picks up the DMI plus and takes off, and this reverses back up like it did on the hourly, because if I go back to a 2-day, I'm going to just do 2 days for you to show you why I was looking at it, or even that way you can see it. And instead of the 15, we go to 15-minute chart. What it does, it shows us where the support was, came back to this downtrend channel, found support, broke out, cleared the prior day's range, and we're coming to this area. This is a very important area. If we clear it, we continue higher. If it doesn't, it fails, and you brought it here somewhere in this range, and the 80%, you'll have a stop here to basically take some profits off. And if it continues on the way up, you look for the 38, 50, 61, and so on. Hope this was helpful. If you do have any questions, please get in contact with us. Give us your thumbs up and let us know how we can help. Over.